Hi, I'm Max Keiser, and this is the Keiser Report, Markets, Finance, and Scandal. I'm Max Keiser. This is Stacy Herbert. Get a good shot of Stacy Herbert. Yeah, that's right. Stacinium, the rarest element known to mankind. You know, Stacy, speaking of rare elements, I was reading about how in Hong Kong it's rumored to be true that most of the brokers there are snorting lots of cocaine. And it brought back memories to my days on Wall Street. Back in the 80s, when the market was making new highs, the New York Times estimated that 98% of the professionals working on Wall Street were doing cocaine. And of course, the market kept hitting new highs. Now Hong Kong keeps hitting new highs. Why? Because the brokers are blitzed on coke. Now America, dealing with the depression, what are they mining? What are they going for? Lithium. That's right, Afghanistan. Lithium, opium, downers. You understand, drugs drive the global economy. More on that later. Let's get some of the headlines. Stacy, talk to me.
Well, Max, talking about the global economy, first headline is Stiglitz. We have to throw bankers in jail or the economy won't recover. So this is Nobel Prize winning economist Joseph Stiglitz saying that the reason why the economy is not recovering is none of these bankers are in jail.
Yeah.
Now, there was one thing that he said in particular that made me think of the rest of the stories and the headlines I have. The legal system is supposed to be the codification of our norms and beliefs, things that we need to make our system work. So this codification of our norms and beliefs can be seen in the very first headline I have following this: Shameless Britain lacks embarrassment about debt. So these are our norms. We are not embarrassed by debt anymore. According to a new survey coming out of Britain, Britain has become a shameless nation where a third of adults are not embarrassed to discuss their debt, and 18% feel no shame about bankruptcy.
Well, they have a debt addiction, and they're in denial about their debt addiction, whether it's cocaine, heroin, or debt. Whether it's the British people who went overboard on real estate speculation, or whether it's brokers in Hong Kong, or whether it's service contractors, servicemen contractors in Afghanistan, they're all on drugs in one way or another.
And so Joseph Stiglitz is asking, where is the justice? Where are the bankers being arrested?
How come they're not in jail? Okay, William K. Black asks the same question. He put over 1,000 in jail for the S&L crisis. How come they're not in jail? I've been saying this for years. They've been committing fraud. It was fraud in 2007, 8, 9, 10. It'll be fraud next year. Geithner, Bernanke, Summers, they're all crooks. They should all be in jail. They should all be doing time. Obama lost the midterm election. Why? Because he's soft on financial terrorism. Soft on financial terrorism. Now he's a lame duck, nobody loser. And they got frickin' Republican Tea Party idiots down there in Washington who are just Koch bots, functionaries for the same frickin' corrupt, nonsensical Wall Street idiots that we had before, except worse.
But Max, the legal system is a reflection of the population itself. So these populations, if they're operating their own personal Ponzi scheme where this is the policies they want. And you see that in the following headline. The Federal Reserve just slammed savers and gave a huge gift to the banks. So everybody thinks they are a bank themselves by going into huge amounts of debt. And therefore all policy is in order to encourage more debt, in order to make the debtors happy, because anytime interest rates go up or the cost of servicing their debt gets beyond a certain limit, they screech.
That's right. The savers, the people who put money aside after they've worked for it, are subsidizing the speculators and the borrowers. This is the true divide that separates the have from the have-yachts. And this is truly what's going to catapult us into the global conflict, the insurrection against corporate and banking occupation. It's savers versus speculators. The savers have only one recourse, and it's true on the central bank level, and it's true on the individual level. It's precious metals. That's the only recourse we have. And the gold vigilantes are going to win in the end, and the price tells us this.
Let's go back to this headline where the savers were wiped out. Of course, this is the new round of quantitative easing. And this headline on this reads, Wall Street's cash cow. The Fed rains money on corporations but leaves Main Street high and dry. So of course, this is part of that whole trickle down thing where all the fiscal policy and all the any policy around the population, the bottom 99.9%, is all very austere and austerity measures inflicted upon them. And the theory is that monetary policy will rain this free money down upon these bankers who will bless us with more loans.
Stacy Herbert, what we're talking about here, we saw with Americans pushing the indigenous people into reservations with the manifest destiny that rolled across the plains of America. Now the Walmarticoy Indians, the people who live at Walmart waiting for their food stamp coupons to renew at the stroke of midnight, will be put on reservations and be, basically put out there to die. We saw this in the 40s when they opened concentration camps. The final solution to get rid of all these poor people that they made poor. The fascists made the people poor, and to get rid of their crimes, they burnt them. Now in America, to get rid of these poor people, they're going to come up with their own final solution. They're just going to cut them off from the credit supply, cut the ATM. They're going to go to the ATM for their food stamp, to go down to the Walmart company store to get a slice of processed cheese. It'll be like, you are no longer an American. Please die in the mud. Beep.
Well, how these people are dying in the mud, of course, is the population is being thrown out of their homes through this foreclosure crisis. And in this article about the Fed raining cash down upon the bankers, they talked about Bill Gross, who heads the largest bond fund in the world. And he was asked how he made so much money over the last 18 months. And he said, in addition to a variety of other investments, he's made money by, quote, from mortgages. Yes, in terms of buying them in front of the Fed and selling them to the Fed over the 6 to 12 month period of time. So they're front running the Fed. They know, he speaks to officials at the Fed, and he is able to know when they're about to buy mortgage-backed securities. He goes, buys all these home foreclosed upon and packaged into mortgage-backed securities,
That's right.
and then sells them back to the Fed.
What is that? What's that called? Inside information. Is it legal?
Yes, it is, apparently.
No, it's not legal. Bill Gross thinks it's legal. Why? Because he, like those folks down on Wall Street, think that he's doing God's work. He thinks he's above the law. Now
we move on to another part of this, seeking justice from the crimes that the bankers have committed. Headline reads, Jamie Dimon, racketeer.
Oh my God. This guy is still walking the streets. Jamie Dimon is still free. He's not in prison yet.
Jamie Dimon is the CEO of JP Morgan, the largest derivatives holder in the world.
The largest crack dealer on Wall Street, the largest fake security virtual nonsense market manipulator ever in the history. Makes Charles Ponzi look like Mother Teresa. Jamie I'm a frickin' market manipulator Dimon. He should hand in those vertical stripes he wears down there when he goes to work for the horizontal stripes. Go to jail now!
Well, a lawsuit has been filed against him, a RICO lawsuit. So
now we're talking.
So he's being charged with racketeering.
Yeah, now we're talking.
In a class action suit filed. According to the complaint, JP Morgan amassed a sizable short position in silver futures and options in part through its March 2008 acquisition of investment bank Bear Stearns. Now remember, this acquisition happened over the weekend where they got a sweetheart deal. The Fed forced Bear Stearns all their good assets onto the books of JP Morgan. All the bad assets were taken and given to the taxpayer.
Look, when I was working on Wall Street, we knew all about Bear Stearns. Let me tell you something about the story we talked to at the very beginning of this show. A guy named Jimmy Kane was known for his predilection for something that sounded similar to his name. Where is he now? He blew his entire fortune. Is that because he was using all of his mental faculties at the time, or was he given a little bit too much to the ravages of the byproduct of America's military excursions into these Afghanistan?
Jimmy Kane, the former head of Bear Stearns, lost his fortune, and in much of the same way Bernie Ebbers did. He believed in the Ponzi he was pushing. He held on to
Don't get high in your own supply. That's the cardinal rule of the debt pusher. The debt pusher. Jamie Dimon, he doesn't make that mistake, but you don't know. It's still early in the game for Jamie Dimon. He may go the way of Jimmy Kane. Flat frickin' broke.
So this racketeering lawsuit, of course, is something that you've been pushing over the last few years. You're saying that it's an organized crime syndicate, and the suit alleges that starting in early 2008, the two banks, JP Morgan and HSBC, began manipulating the silver futures market by accumulating unusually large short position and then secretly coordinating enormous sales of silver futures contracts on the commodity exchange, which is known as COMEX, and is part of the New York Mercantile Exchange.
Yeah, look, Rudy Giuliani went after Drexel Burnham with racketeering, with the RICO. Okay, it's the only way you can actually effectively break up the rackets on Wall Street. And this is true whether it's organized crime with Al Capone in America, or whether it's Goldman Sachs, J.P. Morgan, Citigroup. Of course, speaking of drug dealing, we've got the case with Wells Fargo that bought, I think it was Washington Mutual, that was implicated in a multi-$100 billion Mexican drug cartel money laundering scam. So, I mean, that's what we're talking about here. Remember in 2008, Stacy Herbert, at the nadir of the financial crisis, when no bank on earth had money to meet repo and overnight obligations, the only place that had money were the organized drug cartels who supplied the cash to keep the global economy running for those critical 48 hours. Those are the only folks with actual cash. Of course they're in the pocket of Goldman, J.P. Morgan, Citibank. Of course they're all part of the same financial infrastructure. And of course they're all abusing the products of these drug cartels all over the world. And of course that's one of the reasons why the stock market's going higher, because the brokers themselves are stone crack out of their mind on drugs.
Well, the final headline is relating to this: quantitative fleecing. The U.S. government will spend $511 million to expand its embassy in Kabul, the U.S. ambassador said last week.
It pays for itself. The resale market on the opium. This is a self-financing embassy expansion. $500 million. They'll make that in the first 12 months on the street sale of all the crack and opium that the government will be selling in the ghettos around the world, and particularly in the U.S. or the ghettos that they create. Corrections Corps of America. Who's behind the anti-immigration bills in America? It's Correction Corps of America to fill their jails, because that's their business model. Well, Stacy Herbert, thanks so much for being on the Keiser Report.
Thank you, Max.
Now, when we come back, I'll be talking with probably the foremost authority on the silver market in the world, David Morgan. So don't go away. Stay right there.
Hungry for the full story? We've got it firsthand. The biggest issues get a human voice, face to face with the newsmakers on RT.
For some, this is just a parliament building in Berlin. But then, 65 years ago, it was the final target and the last major offensive for the Red Army. Its capture became the symbol of the fall of a fascist citadel and the victory over Nazi Germany. The Fall of Berlin on RT.
Welcome back to the Keiser Report. Special guest with me today, David Morgan, who publishes the Morgan Report. David, welcome to the Keiser Report.
Thank you, Max. Great to be with you.
Now, I've been following your work for years now, and you have been the man to go to in the silver market. On this show, we talk about gold all the time.
Right.
But now silver has bolted out of its trading range. And why don't you tell us a little bit about what's happening with silver relative to gold, just to get this conversation started?
Sure thing. From the 1st of August of this year, so a couple of months ago, the gold-silver ratio is about 68 to 1. So it took 68 ounces of silver to buy 1 ounce of gold. Today it's about 56. So silver's really, really accelerating in the last couple of months. Once it got above about the $20 level in U.S. terms, it's really bolted up, to use your words, and it's catching a lot of attention all of a sudden.
All right. Now, the big story in precious metals is manipulation. We've had Bill Murphy on the show before talking about, over at GATA, talking about the gold suppression schemes. And now Bart Chilton over at CFTC, the Commodity Futures Trading Commission, is stepped to the plate and made some comments that indicate that he's aware, anyway, that there is some shenanigans going on in the silver market, the COMEX market. What's the current state of play right now? Because there's a huge incentive to keep precious metals cheap, because precious metals are almost the antithesis of the fractional reserve, fiat currency, Ponzi scheme economics that is destroying the economy, some would argue. And precious metals are kind of the antithesis of this. So there's an incentive to keep it cheap. What's the state of play right now? How close are we to getting some clarity in terms of what this suppression and manipulation is all about?
Well, they were very close. I mean, Bart Chilton came out, as you know, and said that he believes that there has been manipulation, but he chose his words very carefully. He actually said, influence the price. I believe that you can't manipulate the long-term trend. It's been up for gold and silver for a decade. However, within that trend, you can smash the price down. We all know price moves market. So a lot of buying pressure moves it up, a lot of selling pressure moves it down. During the CFTC hearings, one of the best traders in the market testified that about 25% of the above ground supply of silver was sold in one trade. Now that's going to move the price down, and it moved it down significantly. Now since that time to now, and Bart Chilton said that the price has been influenced and influenced over and over again, particularly around options expiration, I think that the people that are in the position to be able to move those kind of markets are being watched more closely, because we haven't seen much go on since August 1st. We've seen a little bit of short covering as the price is going up, but it's such a small amount, I'm not going to get all excited about it yet. But I believe that the open interest is huge. We don't know the end of the game until the open interest decreases and see who the winners and the losers are, but I think we're getting close to the CFTC officially making a statement about either position limits or some type of rule change or whatever, but I don't know exactly what will come out.
Now, what's happening over in the, let's say, the S&P futures market? Just recently, we've had the scandals with the high-frequency trading going on, quote, stuffing, as it's called, where the algorithmic trading is coming in and they're jamming the price discovery. That is to say, the buys and the sells coming in to create these markets. They've created fake orders, fake volume. And so it's being widely accepted that these markets, these flash crashes and the manipulation that goes on with the stock market is becoming more common knowledge. But in the gold and silver, we've seen this for years now. It seems that at some point there's going to be a realization that, yeah, all that market manipulation in the S&P futures contracts is happening, has been happening on these gold and futures contracts for years. And the incentive, let's talk about the incentive, because I think people don't understand. They assume market manipulation, you'd always want it to go up. Mm-hmm. But here it's the opposite. You want it to go down. And before we were talking about this, the silver users, the association. Talk about that, because this is new to me. Please elaborate on this.
Well, the only commodity that has a users association is silver, and this is a group of the biggest users in the silver market, which is like Kodak, DuPont, Dow Chemical, those type of companies. And they have an association, and you can take that word for whatever meaning you wish, but they basically have a good contract with the end producers, which is basically your base metal companies like RTZ or BHP, those type of companies that spin off massive amounts of silver, but really don't care about the price because their primary markets are lead and zinc, as an example. So silver, if the price of silver went up 3 times, it might add a 1/10 of a cent to the bottom line because there's so much of the other metals that are produced. So those metals are in the system, and these users can make deals with them in the forwards market, not in the futures market, which most people don't even know, what we're talking about. And they keep getting their steady supply, and they have an incentive to manage the price, let's say. So that's been going on for years, and I defy anyone to come up with a gasoline users association or anything along those lines. So that's step number one. Step number two is this, what you're saying on the S&P. You've got this spoof bids. So explain it to the public, I think in the easiest terms, is if you're at an auction and you're auctioning off an exotic car, and everybody's got their little hands up with their little cards for the number, and they start off the bidding, and there's just tons of numbers up there, tons of bids. So the auctioneer's thinking, my God, look at all these bids. And he goes, and okay, Max, and it's 200,000 and 200,000, and then he looks around and all the bids are pulled down. That's it. Well, this is what's been going on in the futures market. That's one of the lawsuits. The other lawsuit is on what I mentioned earlier, which is the options expiration, where it's it's mathematically improbable that every time the price gets knocked down. And I'm exaggerating slightly, but that's been going on for years. And of course, I've actually taken advantage of it myself because it's something you can almost set your watch to. Hasn't happened in the last couple months. Silver's definitely been trading a much different way than it has in the last decade, in the last few months.
Right. Now, you mentioned that on the short term, the issue of manipulation is different than the long-term trend. The long-term trend is, if you look at the long-term inflation trends, and you look at the long-term trends of the fraud that has become endemic in the banking system, all supporting a longer-term price support on precious metals and silver, moving the prices higher. And what about the fact that the big holders of silver in the fund business, for example, the Eric Sprott up in Canada, or his chief analyst, John Embry, they've come out, John Embry came out and said he guarantees hyperinflation. Now, the only way he could guarantee hyperinflation is if these gold and silver vigilantes, as I call them, get these huge orders and force physical delivery and to bust the COMEX. Now, there's a lot of discussion about whether you can bust the COMEX because now they settle up in cash, et cetera. Now, are these precious metals vigilantes, can they bust the markets and bust the price suppression schemes by taking physical delivery and forcing the issue? Do you see it happening? Is this a trend that can we take some stock in?
I believe you can. I also agree you couldn't do it off the COMEX. I mean, when you go back to 1999 and Warren Buffett, arguably one of the richest men in the world, bought 129.7 million ounces of fine silver. The COMEX had 280 million ounces at that time. He only got 90 million off the exchange initially. So they made him, well, he didn't make him anything, but he said, I'll give you more time to the dealers. Very vague. The lease rates went to about 17%. I believe he leased back the 40 million ounces until he got it over time. So since that time, they now have a rule that says you can only take 1,500 contracts or 7.5 million ounces of silver physically off the exchange. You can't get 90 million. There's only 100 million ounces on the exchange right now. About 50% of it or more is long-term investors. So the real dealer inventory is only about 50 million ounces of silver. Right. So 7 months at max, you're going to take off all the silver on exchange. Well, they're going to do what you just said. They're going to say, oh, well, read the rules. We'll make you settle in cash. But that doesn't mean you can't force the issue, because the amount of silver that's being invested in and the amount used for industry, in my study, which I'm going to be presenting here later today, says that in 3 years we're going to go back into a deficit. Who knows what the inflation markets are going to look like 3 years from now? So I see what I would call a natural corner. There's no way out, is the way I see it. So it doesn't have to come from the COMEX to cause a real problem in, I'd say, probably the next 2 to 3 years.
Right. Reason people buy precious metals is they don't want cash.
Right.
So if you tell them that, well, we're going to settle for cash, this is only going to, it's like a red flag to the bull. They're like, what are you talking about? I want metal, right?
Exactly.
So you're saying that on because the silver market's not that big, is it?
It's small.
Talk about the actual size of the silver market, because the gold market's roughly 150,000 tons, I believe.
Yep.
And it's got an above ground value. I haven't done the calculations recently, but something of the 3 to 3.5 trillion range versus 600 trillion in derivatives, just to put that in perspective. But silver is how big?
It's very small. We all know the price of gold fluctuates daily. So a $5 move in the price of gold buys up the entire silver market.
Let's repeat that again. A $5 price in gold
buys up
is worth the entire silver market,
right.
the physical bullion market.
Correct.
And the mining stocks is that a subset even of that number, or are they roughly?
That's just physical market. That'd make it a greater number. It might have to go 7 or something. But I mean, just the physical bullion is that small. Look at it another way. Was asked this once before.
Okay, but hedge funds.
Yeah, right.
You know, this is blood in the water. I mean, he's looking at John Paulson,
right.
Paul Tudor Jones. These guys, they know that there's huge demand. Demand for silver industrial is there.
Huge, and it's going to increase.
And it's growing, right?
With solar and food and water processing and purification, it's huge. You're looking at an increase of probably 200 million ounces in the next 10 years.
You've got rampant corruption on these exchanges from the industry that's artificially keeping the price cheap. You've got, it's a liquid, it's liquid security.
Silver's money, regardless of what you believe. It really is. And it's thought of that way in most of the world, actually.
So on a technical basis, you got me interested now. By the way, Dave brought me actual silver. So this is an interesting coin. This is from one of the miners I guess you'd be visiting.
Right.
Here in France. And a lot of folks come through France, come through Paris, and they visit the mine, and they have these due diligence meetings, et cetera.
Right.
And they come on the show and they bring me silver. This is how I'm funding my retirement now.
Okay, good.
All I need is another 50,000 of these.
Okay.
I've got a lot of shows yet to do. So Dave Morgan, the physical delivery is a problem. And for example, so I'm talking to folks on the inside all the time, and they say that some of these banks who have these silver certificate programs, where they actually give you a certificate that's not backed by paper, cash, but backed by actual silver. and some of the big banks,
Right.
some of the most well-known banks that have, charging bulls as their logo.
Yeah.
So, they're having trouble making good on this, or they see a possible shortage. Are you hearing anything like this?
Yeah, I've heard it time and again. I don't want to make a big issue of it because I really like to deal in facts, but I can be relatively certain that there's a lot more paper silver out of some of these banking houses and brokerage houses that say, you, Max Keiser, own 50,000 ounces of silver, but it's just like a bank run. If we all go down there and say we want our money in cash, it's a 10 to 1 factor, maybe greater than that. Same thing on the silver side, and this is an issue that isn't really discussed very often, where a lot of these paper certificates for silver with no clause saying you have to cash settle, I'm convinced that there's a lot more paper certificate silver than exists in the physical realm, and that's going to cause a problem eventually.
This is like the goldsmiths back in the the 1400 and 1500 period. They sold all this paper, and they didn't have the metal in the vault.
You got it.
That was the beginning of fractional reserve banking.
Yeah.
So we've gone full circle, all the way back to barter, I guess. And in that case, it's good to have these things. All right, now you've got a newsletter, right?
I do.
Okay, David. If I search David Morgan on the web, I'll find all the information.
Put David Morgan Silver to get me. There's a lot of David Morgans out there.
David Morgan Silver. Yeah, good tip. All right, and that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacy Herbert. And I want to thank my guest, David Morgan. And if you want to send me an email, please do so at keiserreport@rttv.ru. Until next time, this is Max Keiser saying bye, y'all.